Given the news that the Strait is closed, we had this huge rally on Friday, capped off one of the biggest rallies in decades. The S&P was above 7,100. NASDAQ was on its longest positive streak since 1992, and the Dow was up 1.8. The question I had written down yesterday for you was, do you expect this rally to continue? I think it's still the same question, but possibly with a different answer now.
I think the thing, though, for markets is they're very happy to price in the off-ramp to peace rather than peace itself. So I think given the developments that we've had today and what we'll see over the weekend, and that we're at all-time highs, I think it's fair to say that there's an expectation that maybe we pull back, but still it is a market. I've talked to so many bulls right now that say, look, earnings look good, and in fact, earning expectations have gone up. So the fact that we sold off just made stocks more attractive and valuations more attractive. So even if there's some uncertainty as to whether ships can actually go through the Strait of Hormuz, markets are just excited that there is a whimsy, just an air of peace, that talks are even happening.
You think they're going to give peace a chance?
Markets are absolutely giving peace a chance. Thank you for that, Christina.
Did you write that down too? I feel like that was
not on here, I promise.
Dani, let me pick up on that though, and I'm curious, as you talk to all of these investors and portfolio managers, how much they are 7 weeks into this tuning out what's happening. You mentioned the fact that expectations for earnings are much better. How much is there a shift underway now, kind of looking through perhaps this war so much as folks can?
I think that's absolutely happening, and I think it's this like Pavlovian urge also to buy the dip, whether it be institutional or retail investors, because they've been burned before. I had a conversation with one sell-side analyst from Oppenheimer, who's the biggest bull on Wall Street, that during the tariff liberation day, he had taken down his estimate for where he saw the S&P 500 ending year-end. And he said that was a huge mistake. We rebounded. Stocks looked really good afterwards. And he was like, I was burned. I'm not doing it again. I'm not moving my price expectation. So I feel like it's just this recent history in investors' minds saying we've had big disruptions before and it didn't matter.
And Liberation Day really looming large for a lot of people is kind of the analog, I think, for folks for what this is like.
I just love a good Pavlov reference. That makes me happy any day.
You're welcome.
All right, Mike, I want to ask you almost the same question, but only with oil, because for me, oil has been a little bit more realistic coming from the diplomacy, whether or not this is actually going to make a difference. You know, we saw oil plummet yesterday. Brent was down 9%. WTI was dropped 12% to $83. What do you expect to see from oil when it opens on Monday? Do you expect that to continue, or do you think that will change given the light of recent headlines?
Well, I think you got that. Given the recent news, it's probably going to be up a little bit. But I think oil's stuck in a new range now between 80 and 100. If we stay above 100, that breaks things. We're seeing what happens when crude oil rallies at such high velocity. The whole global economy is tilting downward. GDP estimates are lower. If it stays above 100, it'll make it go lower. Below 80, I think eventually it'll get there, but not right now. I think the market's looking at what's happening in the Strait right now is a bit of the battle of the bulge during World War II. We'll get through it. It's just a little bit of an aberration of what happened, and it's eventually a matter of time. It'll be open and free shipping will be there. And then it'll be what happened in markets. And the key thing to remember about commodity markets is there's a complete bull market in elasticity. Now, we saw that in natural gas this year. Went up too much. It was up 100%, got to 7. Now it's down to 2.6. It's down almost 20% year over year. That was the guidance for what happened in crude oil in 2022-23. Natural gas led the way down, and I think it's going to do the same thing. And I like to end with the key thing is we like to skate where the puck's going in futures, and that December crude oil future is running at $72 a barrel. It drops to 22 by the time we get to midterms, when it'll be the front month, it goes to 50, and that's still my call.
But Mike, one of the things we were talking about last weekend is even if the Strait gets fully open, and that's a big if, and there's a timeline for that happening, don't you think that the costs are going to rise just by default because you're going to have to pay these sailors more, you're going to have to pay more for insurance for these ships? The default cost of doing business in that region, I would assume, has to go up.
Absolutely. So we keep talking about 20% of the world's crude oil or exports and production. Maybe it's really now 10% because Saudi Arabia has found ways around it and different things, and we might have sanction relief or Iran can release. So let's talk about the other 80%. And that is, if you look at U.S. and Canada, that excess, the surplus versus a supply versus demand is running 8 million barrels a day. And that's becoming a surplus in the market. What stops that from going to 10 million barrels a day? And I'll tell you one key thing that would is lower prices. That's the shift on the global economy. Is the answers have changed. Now price maker status in crude oil is in the Western Hemisphere, with the center being the U.S.
Dani, I want to return to bank earnings. So you were here all week watching those come out in real time, listening to the conference calls, these chief executives talking to reporters and to analysts as well. A two-part question. One, what is the biggest takeaway from how they've performed and how they're navigating all of this? And the second is, we listened to the likes of Jamie Dimon for some indication of how he's thinking about geopolitical risk broadly. I think he's comfortable talking, he's comfortable opining on it, and people are eager to hear from what he has to say. What did we hear from him, from Jane Fraser, from the likes of these executives about how they're thinking about the impact of this war on their businesses in the Middle East and on the global economy more broadly?
I think it's fair to say that this was the right kind of volatility for them. And I know it always feels heartless to discuss war and saying it's good for business, but for these banks, it was extremely good for business. All of their trading desks, every single bank that reported had record equity trading revenue. Yeah. All of them also had a really strong quarter for M&A despite all of this disruption. And I think that really fed into the commentary you heard from these executives. A couple of them flagged this uncertainty going forward, Jamie Dimon being one of them. But he wasn't as negative as we've heard in the past. In the past, he warned about clouds, storms, hurricanes, and to be honest, they never quite came to fruition. This time he said, look, there are some things out there, specifically the war in Iran, that are big question marks, and we don't know how it will play out. However, we are still really positive. Consumers are still spending a lot. He got questions as to whether high gasoline prices were making consumers pull back. He said, gas prices don't matter. The fact that jobs are plentiful and that market and labor markets are holding up means we're extremely confident. So it was this air of confidence, and again, you could see it in the numbers. They had really strong results.
Your specialty very much is deal making. You have the deal show on Mondays.
Nice
thank you for that. Yeah, I was going to say thank you for that.
Plug where I can do it. But of course, so much attention has been focused on the Middle East as kind of a font for deals in recent quarters. I'm curious what you're hearing from the likes of lawyers and bankers about how this, even if it's just the uncertainty and the pause that we're in right now, is affecting the appetite for those deals going forward? Is it changing the way that the Gulf and the Middle East is perceived right now?
It's such an important question because this has been the source of funding for deals, be it private equity or be it for funding in the markets and financing markets. What I've heard is the only thing that's really changed is just the inability or the difficulty to get to that region.
Can't travel.
To travel, to get on a plane to meet face-to-face with these people.
Which is very important.
It is extremely important, especially for things like fundraising. And you have the fact as well that these nations are now spending more on their own domestic projects to try to guarantee security. However, we should keep in mind that these are massive sovereign wealth funds, that there's a lot of appetite, and even prior to this war, they committed massive amounts of capital. They are the steady source of funding in a world that's been beset by uncertainty, and that doesn't look like it's changing, even if you can't get bankers literally traveling to the Gulf to meet with these folks.
All right, Mike, I want to ask you about our favorite subject, and that is commodities. We saw gas prices are coming down a little bit, but not as much as I personally would like them, or I'm sure a lot of people. They were down about a dime over the past week. How are we seeing other commodities responding, and how is natural gas doing? Oh, we've got a chart right there.
I'm glad you went. So first, we mentioned natural gas. Natural gas has been a great lead indicator, and it's U.S. Remember, the thing about natural gas is we have an ocean of natural gas in this country, and it's proven in price. Every time it gets above 5, it goes back down. But it's the number one measure or use or source of heat, electricity, and fertilizer. From the Corn Belt, we just call it anhydrous. So that's not a big thing. But what happened when crude oil pumped, it pumped prices of corn and soybeans. And one thing that's happening in that space is, yes, it's a fertilizer issue, but most of the decisions for this year's crop were made last year. And the key theme is corn and soybeans. But every conference I go to, the key theme they say is we need some more demand, which means potentially biofuels, which means more fuel. It just increases that superabundance of food and electricity and food and energy in this country. Now, also at the same time, we're seeing a spike in diesel and gas prices. That spike is significant because it really shuts off consumer spending. It messes up capital budget decisions. And it's like one of those things where you look over and like, yeah, honey, we probably should lay low on what we're going to spend for a while until this alleviates. So the data from this period, I think, is going to be pretty bad. And you can see that in the polls. Polls are very negative on Mr. Trump. Obviously, that might change. But overall, this reminds me very much of what happened in 2008 when we had that spike in energy prices and the Great Recession accelerated. And also in 9/11, when the event happened and people just shut off their spending. So that's what I'm worried about as we go forward. And the stock market doesn't care yet.
And how are you feeling about crypto? Because here on the weekend, that's one of the few things we get to track live. It's that and poly markets, which we're going to talk a lot about later. How are you feeling about Bitcoin?
I sense in the space, most people are still, it's like I think of that Bruce Springsteen song, Glory Days. They're trying to live the old glory days. That whole bull market is over. Now it's in a purge. And I look at it, it's a space with excessive supply. There's millions of cryptos. Bitcoin had the blessing and curse of being the first. And I fully expect it's going to continue downward. And the key theme, I think, I put it in the same bucket as copper, industrial metals. The only way that space can go up is if the stock market goes up. And now they're starting to lag the performance. They used to lead the performance in the stock market. And that started in 2021. Since then, it's been lagging, and most notably since ETFs were launched. So I think Bitcoin's more likely to head towards 50 this year, and we're at a pretty good resistance level right now.
Dani, we've got about 30 seconds, but really quickly, because you always look so chic. LVMH had a bad reporting,
Yes.
And you're seeing that across a lot of luxury brands.
Hermes as well.
Yeah, is that because people in the Middle East are big customers and not spending, or is that just how luxury consumers are feeling right now?
No, they definitely chalked it up to the Middle East. That was a really big factor in it, but you've seen that kind of across the spectrum of luxury goods, not even just clothes, which obviously, and handbags I care more about, but things like Ferrari.
Same girl, same, but
yeah. I'm glad, kindred spirits. But Ferrari as well, they've been unable to actually deliver cars to the Middle East. That being said, we had the Rolls-Royce CEO on. They just unveiled this super exclusive car. I think only 100 of them made. He wouldn't say the price because, you know, it's
you have to ask.
to discuss prices. And he said there were plenty of buyers in the Middle East.
Yeah, we're gonna